Do you trade the SPY or SPY futures? If so, you need to keep it locked right here and watch this video. I've got you covered on what might happen next week with the price action on SPY, covering all the big news events, the divergences, support and resistance, supply and demand, where we could extend to and where we might finally get a failure. So let's get into it right now, starting off with the higher time frames. So starting off with the monthly chart, a chart which is often ignored, but as you know, we are now into February. Last week, we transferred from January into February, which means we have to pay attention to the monthly chart. So the first thing we need to look at is what is the trend on the monthly chart. Well, quite clearly, we are still making a series of higher highs and higher lows. And as you can see, in January, we had a pullback through this imbalance, didn't quite retest the area that we would have liked before exploding upwards, and in the last few days of the week, which was the start of the new month, February, we got a big expansion to the upside. So far, looking at the higher time frame, starting with the monthly, we are absolutely bullish on this, right? Bullish, bullish, bullish. There's no reason to be picking tops right now. That doesn't mean a pullback isn't due. It most certainly is. But for now, we are bullish through the all-time highs. So the next time frame we're going to do is drop down into the weekly. And as you can see here, we are also making a series of higher highs and higher lows. There was a moment for a pullback in the early moment of January, which was that monthly dip, and it did not quite get to the level we would have liked to participate in a potential long. It held the flag and expanded upwards. So yet again, on a weekly time frame, we are absolutely bullish, but it's on this time frame that I start to plot a narrative of where we could potentially look for pullbacks, because I do not want to participate as a buyer at all-time highs. Okay, I do not want to be the guy that might become the liquidity to move lower. I'm looking for pullbacks when I am long. I'm never buying breakouts at highs. So the first thing I want to do is look at the anchored VWAPs. So the main anchored VWAP I am interested in is off this October low. Okay, and you'll see now that you will get a lot of my information starting to pop on the chart. So we're going to turn this to blue because it's a buy signal for me, right? This is where I know buyers are participating. And this is the first moment of confluence I get. Last week I talked about it. If we continue to trend higher, I expect this anchored VWAP to start catching up towards this all-time high area, this old all-time high and this old pullback zone, which will now become demand, which I'm going to go over very soon. So I'm looking for areas of confluence which we might be able to pull back into. So this anchored VWAP off the October low is starting to grind higher, like I said. The next thing we can look at is this right here is a weekly demand block, okay? And I've got this level in as an over-under. Now, the reason for that is I am very much aware that we could come under here and then snap straight back inside. So I want to be cautious of that happening. So the only time I'm going to get short is when I start to have confluence of lower highs and lower lows being made. I'm not just going to look for those breakdown trades and get caught for the snapback. I have to be cautious in these moments. So this weekly demand block right here, this is an area I'm closely watching. I'm going to obviously find lower time frame levels in here and look for structure to tell me that it wants to move up. And with that, I can look for this anchored VWAP to start to come into this zone to give me confidence that it might be an area that buyers want to participate in. So that's the first thing I am thinking of. The next thing I want to look at, and I mentioned it last week, were the possible Fibonacci retracements. So the first one, we can go from this October low here, okay, into the top of the cup. This is the handle, and these are the extensions. And you can see we are very, very close to a key Fibonacci point at the 786. Okay, so that would give us this line right here at 50.28, and as you can see, I already have that marked out. I'm very, very aware that if we are going to do that move, the explosive move through, and sellers start to show up here, that might be an area I need to be aware of. Now, the next fib would be all the way up here. This would be 100% measured move just of that handle. Okay, this is of the handle based on the extension from the October low. So that is another area I want to be aware of. Now, I'm not suggesting we are going to go there right now. I'm just suggesting these are areas you want to be paying attention to so that you can know where there might be areas of confluence where people might want to start selling. And we can, of course, do a traditional fib just of this pullback leg on the weekly, and you will see that these areas are starting to line up. Okay, so there's lots of confluence, which gives me more confidence. If I know fib-based traders doing the cup and handle or doing just the pullback leg have areas in similar places where you've got measured moves and you've got 161s and you've got anchored VWAPs, it starts to build thesis for areas we might be able to extend into and then potentially get stuck in. Okay, I don't want to be picking tops here, but I definitely don't want to be buying the breakout. Moving down now into the daily time frame, and I'm just adjusting these levels so I'm ready for the open on Sunday and Monday. As you can see, I always plot my previous day high, my previous day close, previous day open, and previous day low. They are very, very important levels to me, so I know where people might be trapped. Now, I'm looking for people who are trapped outside of range. I'm always looking for potential breakout buyers who are buying the explosive move out and getting trapped inside for us to come down. And equally, I'm looking for the same the other way. If we get a move underneath and we snap back above the previous day low, I'm expecting moves up. All right, that's how I like to trade. It doesn't mean I'm looking for reversals. It means I want to trade in line with higher time frames once I know a significant amount of people are trapped the wrong side of the trade. So what are the key levels of confidence we have here? Well, quite clearly, you can see on Friday, all right, we came right down off those numbers at 8:30 in the morning and we held that previous day close. Now, I was participating as a dip buyer in there. Now, if you follow me on Twitter at FlowZoneTrader, you would have seen that I was waiting for this dip off the news at 8:30 on Friday. So on Friday we had non-farm payrolls. It came out very, very hot. Short sellers got really interested in trying to force us to go lower, ignoring all structure and momentum. We came down, we tapped previous day close. I knew this was a key level. I started to participate in the long and we got this huge move to the upside. As soon as shorts got trapped, we started to grind back up, and then you had a huge unwinding of short positions as we exploded through all-time highs and almost hit that key level of 5,000 that I talked about 2 weeks ago and at the beginning of the year, which I expected us to come and test in the Santa Claus rally. Like, as I said to you at the beginning of the year, January is normally the Santa Claus rally. It is not in December when everyone talks about it. It is often in January if you do your studying. The question now is, has the target been made? Where can we participate? So on the daily, these are the same levels I'm interested in. Okay, right here, we have a daily block here. Now, I am very, very cautious if we start to break below this level right here, because I know buyers have stepped up once, twice, 3 times, 4 times, 5 times, 6 times, 7 times in that area. Okay, so if we start to get heavy below this level, it's going to become crucial to me. So this really for me is a daily pivot. Okay, if I was looking for a short, I would need to see us get under this level, produce a lower high and a lower low to then start thinking about participating in. I am not just going to be short in and around this level, because as I talked about earlier in this video, you might get snapped back on. They could do a little wash, move back inside, and this kind of move here. So you have to tread carefully, understand what the market is trying to do, wait for it to build structure, and participate in line with the market. From a daily point of view here, I also want to point out this 20-day moving average is coming right up to this pivot, and as with the anchored VWAP, is going to continue to move higher over the next few sessions. Now, this 20-day is key for me because it is bang in the middle of the daily Bollinger Bands. Now, I did look at these daily Bollinger Bands in the last video, and what I found interesting was that the bottom band was starting to curl upwards, something which is extremely bullish. So while we were basing and pulling back off this high Bollinger Band, coming down towards the 20 before moving back up, you will see the curl on the bottom band. So now I'm really interested if we are going to start to move sideways, build some consolidation for the next move up, or in fact, if this is needing now a deeper pullback towards the old Bollinger Band, and by the time it gets there, this band could be somewhere up here in this higher time frame breakout area. So you'll see what I'm building here. Yes, I'm expecting a pullback at some point. Yes, I want to participate on the counter trend short on that pullback, and then I want to be flipping long once the pullback is finished, and I'm expecting a continuation higher unless structure tells me otherwise. Into the 1 hour now, and it was the 1 hour which really played its hand this week, which allowed me and all the members in my room to get long for the rotation back up, because all we had at the beginning of the week was a pullback into a key level that we all knew we wanted to be looking long at. So here was that old key level right here, breakout consolidation. We broke up from it, we swept this liquidity trend on the hourly, came back, held, put in this W shape before the explosive move up. So shorts got trapped down here, and we were able to take that rotation up. And as soon as we started seeing strength here, you will notice that the H1 not once broke structure. Even on this very large white candle here, which is a red candle for most, there was no structure broken, all right? It is just rebalancing price. In fact, we would have liked it to come even deeper and trap more people in to get long. So what am I now looking at here? Well, we have this very clear level of H1 demand. Now we can probably move this up a bit and refine it right into this block here. Okay, and I'm going to just take this across now. We don't need to worry about that. So this here, you could bring it all the way down, but I've got a demand block underneath. So I'm just going to mark out this here and pull it across, and that will be back into a previous day open. If the market wants to give us a pullback and it is just going to hold this and put in another W, I'm expecting a move back to the upside. What a lot of people will now be looking for is a lower high, lower low. All right, so you cannot get short on this until structure changes. Even here, you have to be careful against this previous day low. But once we start breaking down and coming for this double bottom down here, we can start thinking about joining this trend on the way down, knowing that the higher time frame is still suggesting we're going to go higher. You have to be aware of that higher time frame. But yes, it is possible that some bulls were trapped towards end of day up here. And I must mention now that the only reason we are up this high is because shorts got trapped and the Mag 7 really started to pump. If you look at the S&P as a whole right now and take away the top 7 companies, we are not really looking that good. All right, we're not looking like we should be at all-time highs. So there most definitely is some divergence in the market, and I'm going to go into that later when I look at the VIX and the DXY as well. But for now, I just want to stay with the H1 for a minute. So building out thesis here, I'm looking for these breakout retest levels on the H1 to hold if I'm going to get long. I'm not just participating long in here. I need to see a willingness for buyers to step up, and the same at this previous day low and the same down here. This whole area here could get pretty violent pretty quick with some action like this, okay? Because I do not think it is based on very good structure. We had a very big squeeze out on Thursday and Friday, which means it can come down just as quick if no buyers are present to keep pushing. Remember, we pretty much hit our target of 5,000 right now. So the only things left above are these Fibonacci areas based on extension patterns, and we don't have to do that right away. We can, in fact, do some pullbacks first. What is my thesis in thinking we might be due these pullbacks? We need to look at the divergences. So the first thing I want to look at is the DXY. One of the reasons Friday was such an odd day is seen right here on the daily. You will see that the DXY has started to make that move of the inverse head and shoulder, which we talked about last week. And this sort of area here is the neckline, all right? So if it can break through that, hold the retest, I am expecting higher prices on the DXY. Now, you will notice on Friday, we had a pretty bullish move here. This right here, this candle, green candle upside, is a very bullish move to the upside. And on a day where you see the markets like ES, SPY, NQ, QQQ move to the upside violently, you would be expecting the DXY to be breaking down here, but it didn't. So here we have quite clear divergence in the market. So you need to be very cautious. My feeling is Friday was very much just a squeeze out on the SPY and NQ based on the Mag 7, people closing their short positions, and we could be due quite a big pullback quite soon. Timing that is going to be absolutely key. So my eyes are on the DXY right here. Do we start failing this neckline area, or can we start converting this supply area into areas of demand and start looking for these higher prices and pushes up? Because if we start basing above here, the market will roll over. Remember, the last time we were all the way up here in the dollar was when the market started finding its bottom in October. So all this area up here, this push up, would mean a significant rollback on the market. I also now want to have a quick look at the VIX. So I want to have a look at the VIX now, and it very much looks like a penny stock, doesn't it? A huge move up, a huge crash down, and we're getting that sort of basketball move to the right hand side, right? Building a case of higher highs and higher lows, as you will see. Now, yes, this could potentially be a bear flag. I know what you're all thinking, but you have to consider where we are on this chart. So I'm going to go to a monthly now to make you see. We are near all-time lows. There really is not much range for this to go much lower, which is why I'm very cautious, all right? I'm expecting a move to the upside on the VIX to reprice some of this area. Now, when you take that into consideration, while looking at the dollar, which looks like it wants to move to the upside, if the VIX can start to break out of this kind of area right here, let's call it just from 15 and up, where it keeps rejecting. If it starts to break out above 15 and the dollar starts to show strength, the markets are going to roll over. Now, I don't know if and when that might happen. I'm just giving you clear thesis of what you need to be aware of. Because you might have a situation where the markets make a new all-time high above 5,000. Maybe it hits one of those FIBS, which will give you this. And then you get that snapback and this kind of move over the next month or two. So you need to be aware of it because there will be profit taking. Remember, we are through all the big news now, and that's what I want to talk about to end this video. Before we get to talking about the news catalysts coming this week and the ones that we got through last week, I want us to look at the bonds, something a lot of traders overlook. And again, very much like the DXY, the dollar, and the VIX, the clues are in these bonds. So you will see from a daily standpoint on Friday, we ripped to the upside. Again, a very, very unusual thing to see. You would expect this to be doing the complete opposite of the market. And from a daily point, if we again have found the lows on the bonds and we are going to start to base in this sort of area here, okay, and look for this expansion to the upside, you can expect to see some weakness in the markets. And we have some big news coming this week on the 20-year and the 30-year Treasury, so you need to be keeping an eye out for that. Talking about news, let's get into that right now. So last week, we had a huge week of earnings as well as Jerome Powell and FOMC. And what did we learn from this? Well, what we learned was the Mag 7 is still super strong. Okay, they are still looking to rotate these higher, but there's a good chance we are in profit-taking region, as just like the S&P, most of these now are at all-time highs, and you have to question how sustainable that really is, especially when you take into consideration the nuggets of information that we got from Jerome Powell. Now, if you believe it all, or if you're taking a pinch of salt with it, you have to take it at least at face value by what he said. Higher for longer, and then not looking at making rate cuts anytime soon, and that definitely is damaging towards the market. And you saw the initial reaction of the market was a giant pullback, okay, but we came into a very clear level of demand and we just started chomping away getting long. The market is extremely resilient right now, but there are a lot of signs on the wall that we are requiring a rather large pullback. So you do not want to be buying breakout longs this week. I'm not suggesting you should be looking for the shorts or guessing the tops. Not at all. Play the momentum. But just be aware, we are very much on a knife edge. We are in new territory of all-time highs. You still have a lot of political situations going on around the world, and one headline right now can change the sentiment of everything. So it's very important that you do not become the liquidity buying all-time highs just expecting it to go higher. That being said, do not look for the short at the all-time highs. Okay, wait for structure to change. Let the multi-time frame start aligning. Know where your demand blocks are and take the rotation or counter trend, as I call it, short just down into that demand block. Don't be looking to hit the home run. Expect buyers to step up, and if they don't step up, wait for the retest of that level. Again, you can look for that short. So for me this week, I'll be waiting for Monday and Tuesday, as I always do, to set the boundaries, see if I can get the weekly model. Now, last week we had 2 weekly models. We had a Monday, Tuesday, print high, print low. We had the Wednesday, duck underneath and expansion up. And then we had a new week count set on that Wednesday because it was such a big drive with expansion Thursday, Friday. So let's see what we can do. Do we get trapped range at the top Monday, Tuesday and a breakdown or a break above and fail? Or in fact, are we just going to continue this trend higher? Time will tell, but I'm prepared, as are my room, for every possible scenario this week. And don't forget, you can learn to trade with the Flow Zone community right now. A 20-hour course from absolute beginner through to advanced is available on sale right now for the price of $299. You can click the link below. Using the code YouTube at checkout will get you the sale price. Until next week, please trade safe, use hard stops. I'll see you during the week.